Every trading day, we sell 0 DTE credit spreads and iron condors on SPX, targeting a minimum of $150 in premium for about $350 of defined risk, always using 5-point spreads. Over time, this approach has maintained a win rate above 70%. In this video, I'm going to walk you through the framework behind how we structure these trades and why we focus exclusively on defined risk strategies on SPX. But before we dive into the strategy itself, it's important to understand why we trade SPX specifically. SPX options have several advantages that make them ideal for systematic intraday trading. First, they are cash-settled, which means there's no assignment risk. Second, they use European-style settlement, so positions cannot be exercised early. And finally, liquidity is extremely deep, especially for 0 DTE options, which allows us to enter and exit trades efficiently. Most importantly, every trade we take uses defined risk structures. That means both the maximum profit and the maximum loss are known before the trade is even placed. This allows us to manage risk precisely and maintain consistent position sizing across trades. Every trading day, we sell 0 DTE credit spreads or iron condors on SPX. The direction of the spread is determined by two things: the overall market trend and the structure of the options market. The concept is simple. When the market shows a bullish structure, we sell put credit spreads. When the market is bearish, we sell call credit spreads. At the same time, we may structure iron condors around areas of highest liquidity in the options market. When volatility stabilizes and price begins trading inside a defined range, iron condors allow us to capture premium from both sides of the market. These trades are always executed with a clear framework and precise timing. One of the most important parts of the strategy is strike selection, and this is heavily based on gamma exposure, or GEX. We analyze dealer positioning, identify gamma walls, and locate key liquidity zones where large options positioning exists. These levels often act as support or resistance created by gamma, which helps us place our strikes in areas with higher statistical probability. Instead of trying to predict where the market will go, we focus on how the options market is positioned, and we structure our trades around those key levels. Every trade follows the same framework. We collect at least $150 in premium for approximately $350 of defined risk. Historically, this structure has produced a win rate of around 75%. For example, here you can see the performance statistics of our iron condor strategy, which we typically open when the market structure becomes well-defined. Another important rule is that we avoid trading on Wednesdays, especially during weeks with FOMC announcements. Major macroeconomic events can trigger unexpected volatility expansions, which are not ideal for premium selling strategies. Over time, this systematic approach has produced a consistent win rate above 70%. The goal of the strategy is not to generate huge individual wins, but to create a reliable statistical edge over many trades. The key to this strategy isn't predicting the market. It's about positioning around probabilities, market structure, and dealer flows. For example, let's say SPX is trading around 5,085. The GEX structure shows strong support below the market, and the overall trend is bullish. In that case, we might structure a put credit spread, such as selling the 5,075 put and buying the 5,070 put. This trade might collect around $1.50 to $1.60 in premium, while defining the maximum risk at approximately $350 per spread. If the market stays above the short strike at expiration, the options expire worthless, and we keep the full premium. If you're interested in following these trades in real time, we run a free private alert service where we share every trade as we take it. Members receive real-time trade alerts, exact strike levels, risk parameters, market structure analysis. If you'd like access, you can contact GX Options Trading via Discord or Telegram, and we'll send you the details. In the next video, we'll break down real trades step by step and show you exactly how this strategy plays out in live market conditions. If you found this helpful, make sure to subscribe so you don't miss the next one. Thanks for watching, and I'll see you in the next video.